Hello and welcome to Markets Today with me, Luqman Hariz. Today, the FBM KLCI closed 2.67 points lower to end at 1783.66 points, and the ringgit closed at 4.188 against the US dollar. And the ringgit has impressively continued its climb against the US dollar. Right now, it's below the 4.2 mark, trading versus the greenback, and we'll talk more about that after this. Awanda head of trading Asia Pacific Stephen Innes said the ringgit was well positioned, backed by positive domestic macro environment and supported by global growth. Innes says that higher global oil prices supported the ringgit's sentiment. He added that even if the FOMC were to push for a December interest rate increase, sentiment would not weigh heavily on the ringgit. That's one analyst. I have another one with me right now, Shan Saeed, IQI Global Chief Economist. Shan, welcome to the show.
Thanks.
Back in December 2016, on this very show, you were predicting ringgit trading range of between 410 to 430. Now, at that time, this is pretty much contrary to all, at least the big institutions who were forecasting worse predictions for the ringgit. At that point in time, what had inspired you to not jump into the bandwagon and actually be more positive on the ringgit?
It was very simple. Before the election, Donald Trump said that I want a weaker dollar. And on the other hand, Janet Yellen said, that I want a stronger dollar. So we saw at IQI there is a policy mismatch. And moving forward, we saw a lot of uncertainty in the US economy. So at that time, when many, as you said, many institutions were saying that ringgit is going further down, we said no, ringgit is going to appreciate. And the fair market value of ringgit is between 410 and 430. So being a contrarian, we thought, that is the right call to make at that point of time.
And indeed, it has been proven to be correct, at least for now. But is it just a case of a weakening US dollar? How about the ringgit? Does it have its own resilience as well that's contributing to this continuous rise?
That is one factor, that US dollar has gone down year to date, almost 6% against all major basket of currencies. But the other factor, if you see, every currency has got three components. You have the structural component, the cyclical, and the political. If you look at ringgit, all three components are in line with market forces. They're very stable. The economy has been on the upsurge. Plus, if you see, Malaysia is a very important player in Belt and Road equation. So in ASEAN, three countries are very important. You have Indonesia, Malaysia, and Philippines. So if you are part of that Belt and Road, you're relevant. But if you're not, I'm sorry to say, you become obsolete or irrelevant. So Malaysia being, part of Belt and Road, is getting a lot of attraction from global investors. Secondly, I think the geography of Malaysia is very important, especially the Strait of Malacca. As you know, 80% of China's, trade moved from west to east through Strait of Malacca. So I think geography, economic confidence, and the strong growth has propelled, global investors to look at Malaysia from a very favorable angle.
For the longest time, we've been talking about how ringgit's real valuation has not been reflective of the country's true fundamentals. We've been talking about negative sentiment, actually bringing down the value of the ringgit to a point that it's an unfair valuation. So now, the ringgit has actually hit your prediction. Do you think the value right now is free from any negative sentiment and is truly reflective of the country's fundamentals?
You see, all the economies, they run on macro variables. Macroeconomics drive the economy. It is not the micro events that drive the economy. Many analysts, many global institutions have been making sweeping statements that, Malaysia's GDP will be below 4%, ringgit is going to collapse. Economy runs on many variables. You have markets, you have government, you have policies, you have geopolitical risk, you have geopolitical maneuvering, you have non-state actors. Some variables, they work for the economy, and some variables, they work against the economy. Malaysia in 2016 and 2017 has been able to navigate those variables and made them possible in her favor. So I think ringgit will continue to upsurge. I think the fair value is very much there. I wouldn't be surprised by year end ringgit touches 4 against USD.
So you're right the first time. So you are confident that the current momentum can be sustained despite the fact that we have major developments coming, not to mention, general elections and things like that. Do you think this could disrupt sentiments and the momentum of the ringgit going forward?
As I said, the economy does not run on single variable. There's so many variables. They are working for and against for the economy. So I still believe and I stand. At IQI, we think that year end, I wouldn't be surprised, ringgit touching 4 against USD.
Will it ever go below 4?
Premature to say, but 4 is very much there that I can see.
All right, we'll come back with Shan Saeed, IQI Global Chief Economist, and we'll talk about a bunch of other things, including the budget deficit, to the Fed, even the PM's recent visit to Washington. Stay tuned. Welcome back to Markets Today with me, Luqman Hariz. Let's take a look at today's business brief. AirAsia Philippines reportedly plans to raise up to $250 million through an initial public offering. According to local daily The Manila Times, the underwriter of the deal, BDO Capital and Investment, said they are still reviewing the numbers and structures of the IPO. No timeline has been given. BDO added the IPO would target both local and international investors. And back home, the Customs Department is confident that the GST collection this year will exceed targets. The department says they also expect it to exceed the 2016 collection of 41 billion ringgit. Customs DG Datuk Sri T. Subramaniam says the previous month's collection is more than they collected last year. He says Customs is proposing an amendment to the GST Act in order to better tax the digital economy. After 4 straight months of declines, RAM Ratings expects petrol prices to boost inflation in August. The rating agency said it expects an inflation rate of 3.8% in August, driven by higher petrol prices. Although food is still expected to be the biggest contributor to inflation moving forward, its share in the inflation pie is expected to decrease to give way to fuel and transport costs. RAM Ratings also expect a headline inflation of 3.8% for the whole of 2017. Shan Saeed is still with me. He's the IQI Global Chief Economist. Shan, what do you think about the last story there? Will petrol prices continue to be, or at least be, the new driver for inflation, the inflation spike in Malaysia?
Whenever oil prices go up, it adds to inflation. But every central bank has got a monetary tool to curb that inflation. So even at this rate, 3.8, I'm not worried that inflation will go up. Yes, it might show its head in the short run, but in the long run, I still see inflation will remain subdued.
On the global front, talking about oil prices, OPEC's move has been quite ineffective. What's your forecast for the oil price moving forward?
I think if US dollar continues to go down, oil prices will stay up. And with production cuts coming from OPEC, plus the geopolitical risk, oil we see will remain on the rise.
And interestingly enough, you've been mentioning about transactions of oil made between Russia and China, which were made in yuan. And this has not been widely reported. Can you tell us about that?
Yes, in the last 5 to 6 months, China and Russia have been transacting oil payments in yuan. That is very significant. In fact, they have bypassed the dollar related transaction. So I think yuan related transaction will become big. As I said many times, yuan is the currency for emerging markets. More and more countries are interested in taking position in yuan.
But interestingly enough, why was this not reported widely? Because it's quite a significant story.
People should watch Astro Avani and they should listen to Luqman Hariz.
No, but seriously, this is quite significant. What does this mean for the currency and also for the US dollar?
I think it's a huge dent to the US dollar because, as you know, all transactions are traded in dollar. But Russia and China, they have made significant move. Even recently, China has lent $10 billion to Iran, and that transaction is in yuan, it's not in dollars.
Any bearings that this will have on global oil prices itself?
Oil prices will remain on the upside because of depreciating US dollar, and geopolitical risk is one of the biggest factors that will contribute on the upside to the oil prices.
Do you think it will contribute pressure continuously going forward? Because when you talk about geopolitical risks, you cannot stray far from the current North Korean situation. It doesn't look like it's going to end very soon. Provocation is coming harder and faster every single day. Where will this end?
The North Korean leader has been very unpredictable. Many global players have shown a lot of restraint and patience with him, but I'm not surprised that this is not going to end soon. It will remain longer for quite some time.
How would the policy in the US better adapt to this new situation, or do you think they are at the optimum position right now?
I think US has been very, very cautious, and they have been very, very patient with North Korean leaders. North Korean leaders has not shown maturity, or I would say he has not shown being an adult in the room. You know, he has shown being a teenager kid. So that will not help the cause. You know.
Right. We have a bit more time left. Since we are talking about the US, news headlines have been focusing on the recent visit by PM Najib Razak to his counterpart Donald Trump in Washington, and the slew of, not to say deals, but commitments made. Your general insights into how would this affect the Malaysian economy?
If you see, I mean, Malaysian Prime Minister meeting Donald Trump is a big achievement, I would say, in the sense. Prime Minister has shown diplomatic brinkmanship, and he has shown political maturity in handling domestic front. And going to meet Donald Trump, it shows that Malaysia has got a very significant role to play in ASEAN and been part of Belt and Road, Malaysia's economy on the upsurge, and a lot of global leaders would like to do business with Malaysia because your income levels are rising. You would only do business where economies are rising. You would not do business with countries like Greece or Italy where
but
economies are
looking
going
more
down.
inwards, economic-wise, how would these commitments probably affect the Malaysian economy? We're talking about commitments to buy jets, Boeing jets from the US. We're talking about the EPF possibly investing more overseas in the US. How would you think this would play for the Malaysian economy?
I mean, trade happens everywhere. There are countries who are buying jets or buying Boeings and, investing in various countries, And diversifying your asset is always a good strategy. So if EPF is making investment in US, it's good. I mean, diversification is always
Do you think it's a bit premature to expose ourselves more on the international front after the onslaught that we've been having for the past few years?
I think everybody's investing in US. It's not just Malaysia. China has been investing. Japan has been investing. So all the global players are investing in US.
All right, thank you so much, Shan Saeed, IQI Global Chief Economist, for being with me today to discuss a slew of issues. That wraps up this episode of Markets Today. Be sure to follow us on Facebook, Twitter, and Instagram, all our social media platforms at 501 Awani. Download our app, as you can see. I'm Luqman Hariz. Thanks for watching. Have a good day. Thanks.
Okay. Thanks.